I'm happy to be here once again. So, our topic today is bank reconciliation statements. This is bank reconciliation statement part 4. Please, if this is your first time of attending this class, kindly go and attend our previous classes. Bank reconciliation part 1, bank reconciliation part 2, and bank reconciliation part 3 for better understanding. So, attend our previous classes before you attend this class for better understanding. So, we have to solve some questions here. So here is a question that we want to solve. There is a question. You can see this is a question. Yeah. On 30th September 1996, A. James cash book showed the debit balance of 1,180 naira 20 kobo in the bank account. The bank statement of the same date showed a credit balance of 2,068 naira 65 kobo. On comparing the cash book with the bank statement, it was found that check 853 naira and 5 kobo had been drawn but not yet presented for payments. This is an unpresented check, and as we learned in our previous class, that's an unpresented check. So unpresented checks, we define unpresented checks as we say unpresented checks are checks issued by the account holder but yet to be presented to the bank by the payee. So the check has not been presented to the bank for encashment by the payee. So this is one of the causes of discrepancies between the agreement of the bank balance in the cash book and the bank balance in the bank statement. So this is an unprecedented check. So we are going to treat this in the bank reconciliation statement. Then we have here checks 229 naira 35 kobo had been paid into the bank on 30th September but were not credited by the bank until the following day. This is an uncredited check, and we explained and defined the meaning of uncredited checks. We said uncredited checks are the checks deposited by the account holder but yet to be credited by the bank as at the time of preparation of bank reconciliation statements. So this uncredited check also has to be treated in our bank reconciliation statement. So we have two items now, two transactions that will be recorded in our bank reconciliation statement. So we have here also bank charges 16 naira 5 kobo appear on the bank statement but not in the cash book. So this item you have to import it into our adjusted cash book because it has not yet appeared in our cash book. It's only appearing in the bank statement. It's appearing in the bank statement on the debit side. So we have to import it into our cash book credit side. Then we have a standing order. You have a standing order. You have a standing order 15 naira to a trade association payable. A standing order, and we defined a standing order also. We said a standing order is explained as a payment effected by a bank based on customers' standing instruction. Based on customer standing instruction. So this also is a credit balance in the adjusted cash book. We have to credit it to our adjusted cash book. Then we have dividends here 296.25, that is 296.25 kobo collected and credited by the bank did not appear in the cash book. So this is an income. This one it has not been debited to the cash book. It's only appearing on the credit side of bank statement. So we have to debit it in the adjusted cash book. So let's quickly look at the question. So say complete the cash book to show the balance. which it should have shown on 30th September 1996. So we are required to prepare an adjusted cash book, that is an updated cash book. So the second question here says prepare a bank reconciliation statement as at 30th September 1996. So we have the solution here, a ready-made solution. We've prepared that already. So if you check it, so the first thing we need to do, an adjusted cash book. This is adjusted cash book as at 30th September 1996, and the name of the owner of the account is JAMB. Adjusted cash book as at 30th September 1996. So as we said earlier, that the balance brought forward in the cash book, so on 30th September 1996, JAMB cash book showed a debit balance of 1,180 naira 20 kobo. So a debit balance in the cash book of agents will be brought forward to the adjusted cash book as a debit balance. So here is the figure, 1,180 naira 20 kobo. So then we saw bank charges here. These bank charges, we said earlier that it should be credited to the adjusted cash book. That's why we are crediting it here. Then we can see a standing order also, 15 naira. We have to credit it as we said earlier, so that's why we are crediting this standing order here, 15 naira, because it appeared in the bank statement as a debit transaction. So we have to credit it in the adjusted cash book as credit. Also, we have to credit it in the adjusted cash book. So then dividends, this dividend 296.25, 296 naira 25 kobo collected and credited by the bank but did not appear in the cash book. So this amount increases the assets of the account holder, because it will increase the bank balance of the account holder. That's why we are debiting it, and we say anything that increases the asset should be debited. So under cash book, and this is an adjusted cash book, an updated cash book, a cash book that is prepared to accommodate all the missing figures in the cash book. So you can balance up the account. So by the time we had this together, we had this, let's add the debit side. We had the debit side, we got 1,476 naira 45 kobo on the debit side. Then we added the credit side also. So we now deduct it from this total. We got 1,444 naira 95 kobo. So the balance brought forward here, the balance brought down is here. This balance carried down is the balance brought forward here, 1,444 naira 95 kobo. So we will now prepare our bank reconciliation statement. Bank reconciliation statement as at 30th September 1996. So debit balance as per adjusted cash book. This our debit balance is here, 1,444 naira 95 kobo. So we add unprecedented check. The unprecedented check we saw earlier. Unprecedented check, 853 naira and 5 kobo have been drawn but not yet presented. This is an unprecedented check. So we had it. That's the reason we are adding it here. So we had it. We got 2,298 naira. Then we less uncredited check. We normally deduct uncredited check. So we deduct uncredited check. The uncredited check is this. Checks 229.35, 229 naira 35 kobo had been paid into the bank on 30th September, but were not credited by the bank until the following day. This is an uncredited check. So we will less it. That's why we are deducting it here. So we now got balance as per bank statement, 2,068 naira 65 kobo. So we will now compare it with the balance in the bank statement. The bank statement of the same date showed a credit balance of 2,068 naira 65 kobo. So it's the same. So we arrive at the same figure. That means that this solution is right. So, and we should not forget, if you want to prepare our balance sheet, the bank balance that will appear in any balance sheet will be the balance as per adjusted cash book will be this figure. This is the figure that will appear in our balance sheet as bank balance under current assets. Adjusted cash book, balance as per adjusted cash book. We must not forget that balance as per adjusted cash book will appear in the balance sheet as our bank balance under current assets. So this is the solution of this question. This is the solution of this question. Let's quickly look at another question. Another question here. So you can see here is another question. We've prepared we've solved the question already. This is the solution. So let's look at this. It's a past question. So given cash book balance 5,000, you have dishonor check 1,000, you have direct credit 800, then we have direct debit 500. So he said we should calculate our adjusted cash book balance. The adjusted cash book balance is dash. So how do we do that? We have to prepare our adjusted cash book. So here is the adjusted cash book, then cash book balance. So this cash book balance is a debit balance because we were not told that it was a credit balance. So we just assume that it's a debit balance. That's why we are debiting it. Balance brought forward 5,000 is here. Then we have dishonor check. This dishonor check should be credited to the adjusted cash book because this check has already been debited to our cash book before. So we have to reverse it in order to arrive at the bank balance in the bank statement. And what is a dishonor check? So let's quickly explain dishonor checks. So dishonor checks are the checks deposited into the bank upon receipt from customers but subsequently dishonored for one reason or the other. So this dishonor check should be credited. That's why we are crediting it here. Then we have direct credits. This direct credit is an example of credit transfer, and we explained the credit transfer in our previous class. We said credit transfer, this is amount of money paid directly into the account holder's bank account by his customers. So that is credit transfer. So this direct credit transfer is an example of credit transfer, and it increases the assets of the bank account holder. So that's the reason we are debiting it here. Can we see 800? So we debited it here, 800. So let's look at another item. So direct debits 500. This direct debit is an example of a standing order. It's an example of standing order, and we explained standing order in our previous classes. We said standing order. This is explained as a payment effected by a bank based on customers' standing instruction. So this is a payment. So this one reduces the assets of the account holder. So we have to credit it here. That's why we are crediting it here. So then we need to add the debit side. We added the debit side, we got 5,800. So the debit side is greater than the credit side, so we are having the debit balance. So we added these two, 1,500. We deducted it from this 5,800. So our balance carried down 4,300. So balance brought down 4,300 debit balance. So our answer here is B. The adjusted cash book balance is 4,300 naira. 4,300 naira. So let's look at another question. Maybe we should solve another question here. So this is the solution. You can see this is the solution. This is the question for not viewing. This is the solution. So students can try this and solve it on their own. You can solve this question without looking at the solution. You can cover the solution. You can cover the solution. Cover the solution like this. Solve the question first. Solve the question and you now compare your answer with the answer we got here. So I believe that you have solved this question, so you cannot compare with the answer. So let's look at another question here. Let's look at another question here. So let's answer this question. Here it said a major cause of discrepancy between bank statements and the cash book that overstates the bank statement balance is the dash. So the transaction that will overstate the bank statement is dash. So the answer cannot be the answer cannot be commission paid, because this commission paid will understate the bank will understate the bank balance. It will understate the bank statement balance. So this interest received is a liability to the bank. That means that it's going to overstate the bank statement balance. Interest received is going to overstate the bank statement balance. So direct payment. This direct payment, we can say this one is an example of standing order. So this one can never overstate the bank statement balance. So let's look at this direct withdrawal. So this is a withdrawal from the bank account of the account holder. This one also can never overstate the bank statement balance, because this one will reduce the liability of the bank. It's going to reduce the bank balance of the account holder in the bank statements. So this is the only item, interest received, that will overstate the bank statement balance. So that's for that